Hi everyone, welcome to Bond Bytes, the daily bond market highlights from INR Bonds. I'm Arjun Parsati, and in today's market highlights, the RBI Governor, Mr. Shaktikanta Das, gets a 3-year extension, and this is significant. But before that, in the market itself, government bond yields rise marginally, while the rupee falls marginally, and the Sensex and Nifty also fall. Markets are generally expecting some bit of profit booking on the equities and maybe rising inflation leading to higher interest rates going forward. But let us look at how the RBI governor has tackled the very adverse situation in which he came. And 3 years back, the economy was going through a very tough period, and he had to take decisive steps. And also the fact that the COVID hit the markets last year, and all this the RBI governor had to tackle. And yes, I think the markets have been pretty much positive on how the governor has taken steps. Clearly, I think there was a lot of decisive action both on the economy front before the COVID and post-COVID. There was clearly decisive action on how the RBI tackled, and that has been well appreciated by the markets. But having said that, there is some kind of there is also some bit of market worry on the fact that RBI has been uh, managing the yield on the government bonds, too much of involvement in managing the yield, and this has led to market slightly worrying about whether the yields are actually in the it's market driven or it's being controlled completely by the RBI. And if it's controlled by the RBI, clearly then the market has no say in the determination of the yield, and that has led to some worry in the market side. So the 10-year government bond yield has fallen by about 1.4% over the last 3 years since the time the government took charge. And that's largely because of the fact that the repo rates were cut from almost by over 250 basis points. That is from 6.5% or 6.5% to 4% levels. And the repo rate was cut sharply, and but the government bond 10-year government bond yield didn't fall so much, while the rupee itself surprisingly weakened over the last 3 years, despite the FX reserves rising by 60%. And this clearly shows that RBI has been supporting the US dollar by buying FX, foreign exchange, FX to store up the reserves, maybe to prevent excessive volatility in the currency, and didn't want to let the currency also appreciate sharply. And clearly, the equity markets have done really well. Sensex and Nifty are up by almost 70% over the last 3 years, clearly showing that the corporate performance has largely benefited from low interest rates and very high liquidity given by the RBI, and also a lot of other factors. And clearly, I think at this point of time, where the levels of equity are, it shows that the economy is on a definite path to recovery, but still a long way to go. And RBI has to be vigilant on with inflation, right? So if you look at the core inflation, which is stripped of food and fuel, in the last 3 years, actually, it's almost remained stagnant, despite going down during the COVID period. But then it's come up again. So almost around 6% levels is where they have been. And this is something that has been very sticky for the RBI. And with all these commodity prices and other input prices rising sharply because of very high liquidity, then RBI should be careful whether core inflation should rise very sharply. So going forward, what can the market expect from the governor? I think the governor has done clearly, I think, the decisive steps he's taken. Some of them have been extraordinary because of COVID. So that unwinding should start to happen next year. The repo rate should normalize, and hopefully inflation will be contained, and the RBI should show enough strength to take decisions that could keep down long-term inflation expectations, which is most decisive for both interest rates and rupee and the equity markets as well. Thank you very much, and do not forget to visit our Quick Invest platform for investing in the best bonds at the right price, most information, transparency, and seamless investment process without any kind of settlement risk. Thank you very much and have a good week.